All right, good morning. I'm Tasha Davenport, the CEO of Casvo, and I thank you for joining us this morning for the rising risk of one-sided indemnification. And I'll share with you that this conversation came about from our CBO roundtable. Those are held every other week, and a group of CBOs come together just to share concerns, priorities, ask questions. There's great expertise and lots of new CBOs on those roundtables. And this issue came up as they were talking about the, certainly liability perspective, financial exposure, legal compliance concerns. And we just said, we need a much richer conversation on this topic. And that is when we reached out to our longtime partner, F3 Law, and one of their superstars, Gretchen Shipley. She's a partner at F3 Law. She specializes in ed tech, student and data privacy, contracts, facilities. I mean, just a very rich history of decades of service as a legal expert in education here in California. So, this conversation is also a part of a larger initiative that CASBO is hosting under the leadership of Monique Stovall. She is at Washington School District in West Sacramento, and she's tackling the process of contracts, where they're cumbersome, where districts really start to lose their both efficiency and sort of their control over that process. And the results of that initiative, again, led by Monique, will be shared out statewide to help all of our districts of the varying sizes as they continue to navigate the complexities of contracts. So before I turn it over to Gretchen, I want to just remind you that we are recording today. You will have the slides. Gretchen made some wonderful notes that'll be helpful for you when you go back to the districts that we're both recording. We are sharing the PowerPoint as well. And we are taking questions in Q&A that allows us to track those questions, whereas chat does not. So please put them in Q&A. If we don't get to them in the session, we have a method then to follow up with you following. So we're expecting about 107 or so on the session today. We know that things get in the way, but we're happy to have you. We appreciate you tuning in. And Gretchen, I'll turn it over to you.
Thank you, Tasha. Thank you, Casbo. I'm really excited to be here today and going to make indemnification as exciting as it can possibly be. But honestly, I have been a school lawyer for 25 years, and our job often is to deal with contracts when they blow up, when we're looking at a lawsuit, when someone, I work with a lot of CBOs and business team members who contact us and say, that there's a breach of contract there, we've run into a problem, and we look at the indemnification clause, and I get the back end of it when there's a mess. And so the opportunity to work with you all and try to make sure that we put some measures in place at the outset, and that you all are informed and have the opportunity today to ask questions, please do, because no one wants to listen to me talk for an hour straight. I'd love to answer your questions, and you guys can give real life examples and hypotheticals. I'm happy to work through them. But the idea is to empower you all to negotiate these terms, to understand these terms, to do some risk assessment so that you can protect your organization. And I just, hats off to all of you. I realize in your organization, sometimes you're the naysayer. Often you're probably the naysayer. Somebody wants to procure something, they want to enter into a deal, and you're the one who has to put the brakes on and say, there's some clauses in here we're not quite comfortable with, or there's a lot of risk here for the district. So we're going to put this on pause and negotiate with the vendor. And and today we'll talk through some real life examples of why that is so important. And, maybe you all have had deals gone bad that you all can learn from one another as well. That's why, again, please put it in the Q&A, share your examples. But, basically, I just want to pat you on the back. I understand the importance of your job, the difficulties of your job. And the other part of it is talking about whether it's indemnification or other contract clauses, you're not always going to get your way. Sometimes the party on the other side won't agree to it. And in that case, it's important that you feel comfortable exercising your business judgment, doing that risk assessment so that when you're still recommending the contract to the board, you can really clearly articulate what the potential risk is. And then also just to remind you all, part of what your responsibilities are, and really your school board's responsibilities are, is to protect the public fisc. If you're entering into contracts that have massive legal exposure, it's that, it's taxpayer dollars that, you got to be a little careful about that. Even just to start off with a story, I worked with a school district called me up recently and they said, we want to implement a new security system. Can you review this contract? I'm taking it to the board next week. I'd like you to come to the board and tell the board why they should enter into this agreement. So, okay, doesn't give me a lot of time, but send it over. And it was a security system contract that was 91 pages long and for $9 million. And there was no termination clause. There was no way to get out of it. The indemnification was terrible. But we'll talk about some strategies about building in time and what to look for and how to maybe work with legal if you need to escalate the issue. So again, just protecting those public dollars, because that particular contract, I had to say, I'm not comfortable recommending this to your board, and you should maybe pause a little bit. Okay, with that, I just want to dive right into it. I want to, before we talk about specific indemnification clauses, I want to just do a little bit of contracting 101, big picture. This whole presentation is like a year of law school boiled into an hour. So I'm always available for follow-up questions, or you can reach out to CASBO. And as Tasha mentioned, there's detailed notes for each of these slides, which might answer some more nuanced questions as well. But okay, big picture, let's just remind ourselves why, what's the basics of contracting? What is the root of what we're doing here? It is to set expectations for both the parties. It's to protect you in the event something goes sideways, and really have some process and procedures if there's a dispute. I mean, those are the real, again, it's so easy just to enter into a contract, a vendor's terms and conditions to get the deal done. You're under a lot of pressure, but be thinking about, when you look at a contract, what could possibly go wrong and how could I add in language to protect the district in the event of this going sideways. And then here's some kind of best practices. I just, and then we'll move on to indemnification. Okay, this seems obvious, but contracts should be in writing. Back in the olden days of the law, there's oral agreements, and it still happens, believe it or not. I had, there's basically what can happen is oral modifications. Like, you're years into a contract and you want to change the terms, you just agree to it verbally, no one documented it. Is it enforceable? That gets a little complicated on my end if there's a dispute. So just a reminder, obviously a contract should be in writing. And if you modify the terms or understanding at any point, please go ahead and document that in writing as well. Board approval. We get this question a lot. When does a contract need to be approved by the board? Education code says that every contract should be approved by the board. Well, what does that mean? What's a contract? Every purchase order, every MOU. The way that most districts handle this is that they put it on a consent agenda. So, well, I would say purchase orders often end up on a consent agenda. Anything of real high dollar value or anything that's controversial, maybe those become agenda items on the, main board agenda. But that question about when do things need to get approved, I just refer you to this particular ed code provision, because technically everything's supposed to be approved by your board. Procurement, just a reminder that you always want to take a look at the dollar value of the contract, whether public bidding is required, whether it falls within an exception to public bidding, how you document that, what the process is. So just another fundamental of school district contracting. And then finally, any documentation, anytime something starts to go sideways. So let's say, I mostly these days deal with software contracts. So my examples tend to be in the software space, but, you know, a vendor is not performing. They're not responsive enough. It's not doing, it's not living up to your expectations. It's not, they're not meeting milestones, or the customer service isn't great. I mean, whatever it is, the more you document, the easier it is to make a case for termination or breach or hold them accountable. So even if something seems small, making sure you make a note of it and maintain those notes is going to be really important later on. Okay, before I go through contracts 101, I just want to pause, or get on to indemnification. Does anybody have questions? I can't see the Q&A the way my screen's set up, so CASVO team, feel free to jump in if there's any questions about contracts in general.
We do not have any questions thus far. Just a reminder to everyone, we will share the presentation and it's being recorded.
Okay, indemnification. So many syllables. It is a very complex legal topic. My husband's also a lawyer. This morning, brushing our teeth, we had a lengthy discussion about indemnification. Anyway, I will try to explain it in plain language the best I can, but it's really, really important, which is why we're having this conversation today. So generally, what is it? It is a clause in a contract. It's in most contracts. It's in most district contracts. It'll be called the indemnification clause or an indemnity clause. It's basically a promise by one party to pay the other party for damages if there is a third party claim. So in plain English, well, first, it's a way to shift the risk from one party to another, but I'll try to put this in. It's a promise by one party, like the district, to pay the other party for damages if the other party caused them. Let me give you a plain example. So let's say the district gets sued for damages. So someone's injured, or, let's say that, there's financial damage. The district gets sued, but they were actually caused by your vendor. And so the district can require your vendor to pay the damages in the lawsuit. So an example might be a foodborne illness. You contract with a food vendor, and let's say they sold you spoiled milk and the kids drank it and they all got the stomach flu and somebody wanted to sue the district over it. You could rely upon your indemnification clause that you have with your food vendor and say, you pay the damages for their hospital bills, the damages that they incurred. The district gets sued, but it was actually caused by the vendor. So that's an example of, that would be the district being able to, the vendor indemnifying the district. And we're going to talk a little bit about, obviously today, one-sided versus two-sided or mutual indemnification clauses. But that's, so it's basically to help protect the district, that if one of your vendors actually causes damage to your students or your staff, or, financially, but the district's not at fault, that you can have them pay for your damages. But usually it is the school district that gets sued, even if it's not your fault. Why? You're the deep pocket. The district has the visibility. Parents, we all know, think school districts are responsible for everything these days. And so they don't necessarily look to your food vendor, they look to the district. The district's the one that served that rotten milk to the kids. Also, there's this concept of in loco parentis. You all stand in the shoes of the parents. You are acting to protect these students and supervising these students while they're at school. And God forbid any injury happens to them, they're going to try to hold the district responsible, even though the actual harm might have been caused by one of your contracting parties. And then I throw in here, it's the government's fault. There's a lot of people who just want to blame their local government. And so they like to come after the district. So that's why it's really important in your shoes as you are contracting with vendors to make sure that if they cause damage, but the district gets sued for it, they're going to indemnify you. That's really the importance of this. They're going to pay out that lawsuit, and the district isn't going to pay for it. And I'll get into a lot more examples and specifics as we go on.
Hey, Gretchen, just
Yes,
real quick before we do move on, we've got a question. Is it acceptable to consider the contract approved via purchase order report that the board approves?
can you restate the question?
Is it acceptable to consider that a contract is approved via a purchase order report that the board has approved versus the board having approved the contract itself?
If a board approves a purchase order, it is the same as the board approving a contract. It's a more streamlined process. I doubt that boards spend a lot of time looking at that purchase order, but because a purchase order is a contract. And that kind of gets a little bit into when you use a purchase order or a more detailed contract. But a purchase order at its basic is, we agree to pay this amount to buy this many pencils. They will be delivered on XYZ date. It's a very basic form of a contract.
Thank you.
Yeah, when it's low risk, you put it in a purchase order. Those purchase orders still have to technically be approved by the board because they're a contract. So they go on the consent agenda usually. Hopefully
And a
that.
second question has come in. What are the differences between a hold harmless and indemnification provisions? And is it advisable to include both in a contract as a precaution? Could doing so create any legal or practical issues to include both?
So excellent question. And you are on like slide 25. So there's a lot, we're focusing on indemnification, and then there's all these contract clauses that are sort of related. And I'm going to do a little bit of a deep dive on indemnification, and then we're going to talk about hold harmless, duty to defend, attorney's fees, insurance. Those are all sort of cousins of indemnification. So if you don't mind, I'm just going to hold that question and we'll talk about it. But it's a very, if this is contracting 101, that's like contracting 401. So I'm glad you brought it up, and we will get to that one for sure.
Wonderful. We'll move on and catch more of these questions as we go. Thank you.
But I don't want anybody to hesitate to ask the more advanced questions. I'm glad it's helpful for me to know what you all are interested in learning about. Okay, so this concept of one-sided versus mutual indemnification. Going into this, almost all your vendor contracts are going to be one-sided. And by one-sided, we mean the district will indemnify the vendor if the district does something wrong. The vendor is basically saying, look, if we get sued, but the district caused the problem. So let's go back to our milk example. I'm the, food supplier. The district left the milk out, their fridge broke or whatever, and the district spoiled the milk. Your contract is written usually in a way that says, school district will indemnify food vendor if there is a lawsuit against the food vendor that was actually caused by or the fault of the district. So they're always going to come in one-sided. Part of what you all want to do typically is try to revise that term or counter negotiate to make it mutual, which means both parties are going to indemnify each other in the event that the other one causes the harm. And so I have some example. I mean, we'll get into like contract language later on, but basically it's changing the word from, I'm going to indemnify the other party to changing it to say each party will indemnify the other. I think when you actually read the indemnification clause, you can see how it just talks about one party indemnifying the other versus it making it mutual and saying each party is responsible for indemnifying the other. Okay, like why do you want to request mutual indemnification, or like what's your reasoning? If you want to use some fancy legal language, there's something called the covenant of good faith and fair dealing. I mean, it's simply more fair. If the district has to indemnify them, why shouldn't they have to indemnify you? If they're going to make this requirement of you, then I think it's only fair that you ask that they indemnify you back. And so you can say, look, this contract, it's fair dealing. If you're going to require this of us, we're going to require it of you. Another possibility is if it's really one-sided and this is a really risky contract, and we'll talk about evaluating risk in a minute. But if it's really risky and you're not comfortable with this clause, another option is to simply remove it altogether, which just means if they cause the problem, you can't automatically get them to indemnify you. You may, but you still kind of have the right to do something called cross-claim. Look, if the milk vendor really caused the spoiled milk and you get sued for it and you don't have an indemnification clause at all, you can still sue them for that damage. So there is a, indemnification is just a shortcut to ultimately suing them for causing the damage that you had to pay out. So hopefully that makes sense. When do we care? I already talked about fairness. So when should you really push back? When is this important? I think this is, you all review so many contracts. So what I want to go through with you, and this is part of the more interesting part to me, and this is where I get involved, is in negotiating contracts, when is it important to push back and when is it not? So, one is, well, it's fair. We should ask for mutual indemnification. But we all know there's some vendors that aren't going to negotiate with you and they're not going to assume that responsibility. So you need to kind of evaluate the risk here. One is, what's the value of the contract? Is this a $50 million construction project, or is this a $1,000, contract for somebody to put on an assembly? What's the dollars at stake? How important, what is the potential risk? If you were to get sued for something going sideways, how much could the district possibly have to pay out? And this is where I do a little bit, oops, I didn't mean to move my slide there. I have to do a little bit of an analysis of what could possibly go wrong. I think there was a Ben Stiller movie where he was like an insurance claims adjuster or something, and it was all about looking out for risk and assessing it. So I look and say, okay, if the district was to get sued, what are the potential damages? What could go wrong here? How likely is it? So could someone die? Could this be, they have a serious injury? One thing that's really sad and depressing, but it's, could there be a molestation claim? And when do these type of things come up? And I just off the top of my head came up with some examples of contracts I worked on recently. We had a deal where for free, it was an underserved community. They had an MOU, no dollars for swimming. We're going to provide free swim lessons. And I, pushed hard to make sure they had insurance and an indemnification clause, because God forbid a kid could actually drown. I mean, kids taking swim lessons don't know how to swim. So just because the district wasn't paying any money, but the risk was so significant. I gave an example of, a roofer, your construction contracts, you have people working high up, building buildings. There's a big risk of injury. Therefore, you want to have the indemnification clause. I've given the food example a few times. In the tech world, threat monitoring. This happens a lot. So all of your school districts have software agreements. You're required to have network monitoring. And these network monitoring contracts, I read them and basically they do threat assessment. Well, what if they fail to detect a threat that there's gonna be a school shooting or a student committing self-harm? And so I go in and read those contracts, and it happens all the time that they say things like, we're not responsible if we fail to notify you, and there's no indemnification if they drop the ball, or there's a cap on damages of like $25,000. If there's a school shooting or something, it's a massive multi-million-dollar lawsuit against the district if they knew or should have known because it was communicated through your network and you pay for network monitoring. And so again, shop equipment, anything that could cause injury. Oh, the adult student one-to-one is something, again, that the contract itself might not be worth very much money, but anytime you have an adult and a child not supervised, so this comes up with like aftercare programs a lot, like after school programs. Sadly and unfortunately, anytime there's the potential for like child molestation, those are also very high risk, high value agreements. So I'm giving these examples of when it's more important to make sure you have an indemnification clause in there, at least mutual. Like that they will indemnify the district, not just the district indemnifying them. And I give like the converse, the opposite example is if you're buying textbooks, I don't think there's a lot of risk of injury there. Maybe they don't deliver them on time, but pencils, those are things that you might not need to push back. You might not need to hold up your district. You might not need to hold up the deal to ensure that there's indemnification. So I'm trying to give you guys some judgment of when you really need to push back and maybe when you don't. Do you guys have any questions or examples that you all want to share?
We do have a couple questions have come in, just picking up on the last part of your conversation, where districts are seeing molestation insurance coverage being requested in many contracts. Do you recommend adding that just as a continuance in all contracts, or is that overkill?
So it's you probably don't need it in all contracts. So molestation insurance is very, very, very expensive. So if you have unsupervised adults with students, you will want it. So if you have a lecturer performer, they're standing on a stage. I mean, the risk of molestation is pretty low. If it's an aftercare program, it can be quite high. I mean, it's like $20 million sometimes. I mean, I've seen a JPA want it to be $20 million, and we couldn't get an aftercare program to get $20 million of insurance coverage. They could get 5. So work with your JPAs, but some JPAs are really saying $10 million, and your vendors can't always afford that, or it doesn't necessarily apply. Like a textbook contract provider doesn't need molestation insurance. The one thing I'll say about all your public works construction, they have fingerprinting, and there are requirements specifically to make a barrier between public works construction workers and students. So that too, you can require molestation insurance, but the premium might not, the amount of coverage might not have to be as high because there's other types of protection already in place, specifically for the public works vendors. Oh, actually, now that I think about it, the fingerprinting, background checks has been expanded to, I think, all vendors, all contractors with the district now. But either way, I think molestation insurance, the closer proximity there is between the adult and the student, the more important it is to have it. So, it's kind of a case by case analysis.
An extension of that question is asking that we address the SAM coverage as it relates to facility use agreements.
Did you say the same coverage?
The SAM, sexual assault coverage, as it relates to facility use agreements.
Facility use is interesting because that's a third party using your facility. It may or may not even be your students. So I think the districts have a lot of say and control over what those terms are. But let's just give a hypothetical. It could be the Boy Scouts are hosting a meeting after school in your facility, and it just so happens that most of your students attend. I don't typically see SAM coverage in facilities use agreements, but you could see where it looks as if it's a district program, it's on district property. So, but you all are in the driver's seat. If you feel that there's a high risk, then you can go ahead and request it. I mean, you can put in facilities use agreement, just like if it's after school sports, you want insurance coverage for personal injuries that might happen on your fields. So, but if it's like a gala as a fundraiser where they're using your gymnasium, again, it's hard to make like a blanket rule. It's a little bit of analyzing what is the likelihood of this particular user that something like that could happen.
And Gretchen, are you intending to expand on sexual assault and molestation or SAM insurance later in the presentation, or should I get one more question in here while we're here?
Go ahead and ask the question. I did not plan to cover that, but we certainly can.
Hot topic. Does SAM policy cover online sexual abuse or inappropriate behavior where there may not be physical contact? And how do you address that?
So if the district is providing the online tool and there is any sort of sexual harassment or cyberbullying or cybersexual bullying, you betcha that they're going to hold the district responsible for it. So, I mean, you can see a lot of what's going on with, let's say, AI chatbots, and they're communicating with a student and telling them they love them or that they should kill themselves. You hear these horror stories. Well, if the district put that chatbot in the student's hands, the district would be responsible when really it might be OpenAI or ChatGPT that configured the chatbot that way. The point being, even if it's online sexual harassment, deep fake pornography, anything, the district will be responsible. I mean, it might not be actual molestation can occur if the teacher or the vendor meets the student through the online tool. I mean, we certainly have quite a bit of that, but then the molestation happens in person, obviously. So, again, when to require SAM insurance coverage is something that is not necessarily a blanket rule, but you're going to evaluate based on the likelihood that it could occur. And you can definitely, I assume we have risk managers on this call, so I can't just say, go ask your risk manager, but you ask your JPA insurance coverage, because they're the ones who are going to defend. I mean, they're going to pay for, you'll have insurance coverage typically for claims like that. And so they may say, no, in this case, you need it. In this case, you don't. Here's the amount of coverage we want to see in this situation. I gave the example of after school care. We went to the JPA and said, look, is $1 million enough? And they said, absolutely not. We want 20. And we said, well, they can get 5. And they finally said, okay, we will still insure you for this particular contract.
Thanks, Gretchen. I'm going to allow you to move on. We do
Okay.
still have some questions about the SAM coverage, which could very well be even a deeper dive in another session, just because it's such a hot topic for our districts right now with such tremendous risk and liability. But let's move forward with the indemnification, and we will get to these questions on our next pause.
And I do think that if we do a further segment on SAM coverage, it would be great to get the insurance company involved,
I
because I
agree.
know when they draw the line to pay out your insurance claims or not. Okay, so this is just sort of a recap on indemnification. When is it necessary? Again, it's just a risk allocation. It reduces uncertainty. The idea is you want to recover your damages. I'll talk about attorney's fees clauses a little bit later. You want to limit your liability, safeguard your reputation. You didn't, this scenario we're talking about is where the district didn't cause the harm. It is the third party, and being able to hold them accountable is really important. And just to reiterate, the way these vendor contracts are presented to you, they only will set it up so that the district pays them. So again, why mutual indemnification is important to negotiate for. Let's see here. I think this is pretty obvious. We've talked about it. Without it, you're going to end up potentially paying more than you anticipated when you enter into the agreement. Okay. So I want to talk a little bit about negotiating these, because this is, what I do, but this is also what you all do when you step up and negotiate, and how do you do it? So one question you might ask is, who are you negotiating with? I think it impacts your negotiation strategy a little bit. Often it's the salesperson from the vendor. They are motivated to get the deal done. Sometimes a salesperson will agree to whatever you ask them because they get commissions. So there's that. A contracts manager will maybe understand the nuances and the impact of an indemnification clause a little bit more clearly, and the fairness of it all. If it escalates to their legal department, this is me talking trash about lawyers a little bit, it can really hold up your deal. I do a lot of cell tower agreements, for example. And if I have to go to AT&T's legal department, it pushes us back three months. You get these big multinational companies with a lot of bureaucracy. And if they say, well, the only way we can do this is to take it to our legal department. I mean, I'm not saying you shouldn't do that. You just want to factor in what is your timeline and how important it is to get the deal done within a certain time frame. But lawyers can, as we all know, really delay things and make it more complicated. But I think when you're doing your negotiations, I think it's just a thought to keep in mind who you're working with on the other side, and how that impacts your strategy. Okay. So negotiating strategies. This is another law school class. We take a class just on negotiations. But here's something to think about. Shifting of the risk goes to the value dollar, the value of the agreement. If it's let's say you're paying $100,000 for a transaction with a vendor, but if there's no indemnification, it might cost you more in the long run. And therefore, you might need to charge them more money. Or if they are willing to indemnify you, it might make you give them a discount. So it really, that the whole idea of things like insurance and indemnification are built into, you all probably know math better than I do. It really goes to, what are you willing to pay? And, what kind of safety net does this vendor have built into it if something goes sideways? So it can go to the actual dollar value. If they're not willing to indemnify you, you might say, well, then this is going to cost us more in the long run. We're going to have to charge you more, or we're going to pay less. The district time limitations may really work in your favor. We, these vendors don't necessarily always work with public entities. So you all know that a contract has to be approved by your board. The Brown Act says it has to be on the agenda 72 days in advance, 72 hours in advance. Your district operations might say it has to be submitted a week in advance. So sometimes what you can use these in your favor to say, look, I have to get this deal done. I have till tomorrow. You need to agree to this term. So I see that as a negotiating strategy, using your public agenda board timelines in your favor. Or another one is your district policies and procedures. You can always say, look, we have a policy that requires me to request mutual indemnification, or we have a practice, or we have a procedure. This is my district's contract checklist says I am supposed to request mutual indemnification. The higher authority strategy, I got to ask my boss. Sorry, my boss won't let me. It's not me, it's somebody else. My board's not going to go for this. So, blame it on somebody else as why your hands are tied and you have to request mutual indemnification. The other one is strength in numbers. You got to be a little careful with this, but this is something Tasha and I talked about the other day. Let's say it's a piggyback contract where not only they are entering into a contract with you, but they have the potential to enter into the same contract with every other public agency, which is a big benefit for your vendor. You can say, look, if I'm negotiating this for the benefit of all public agencies, I need to make sure this is protective of the public agencies to the greatest extent possible. And so you can kind of lean on the fact that it's not just your district, it's any district. And that's why you really want to be strict on your negotiation terms or your mutual indemnification. Another one is, your whole county office might get together and all want to adopt the same vendor. And so it's, again, strength in numbers. It's not just my district, it's all 42 districts here in San Diego County that want an exclusive contract with your milk delivery service. I don't want to say throw out the CASBO listserv, like, look, there's 1,000 school districts in California. If you want to do business with us, you got to treat me fairly. There might be a more diplomatic way to say that. You all talk. And so it's just a way to diplomatically say that it should be a fair agreement with you, because maybe that your neighboring district got a better deal and you can use that to your advantage in your negotiating strategy. Be very careful not to threaten to publicly bash them. So you don't want to say, enter into this deal with me, or I'm going to go on the CASBO listserv and say that you were unreasonable or you did us dirty, because they actually can come after you legally. It's sort of like libel and slander. It's called interference with prospective economic advantage. To bash a vendor publicly so that other people won't do business with them can really come back to bite you. So it's again, on one hand, strength in numbers, like it's not just my district, it's every district in the county, or I work with districts throughout the state. I think this would be beneficial for all of us. Or this is a piggyback contract. There's ways to say it diplomatically. Don't do it in a threatening way, or it could come back to bite you. My last bullet point here is about how lawyers slow things up. I think we all know that. Any questions? Oh, so my next, I'd be happy to answer any question about negotiating strategies, but I also have a slide here on what if they don't budge? What do you do? So if I'll pause real quick, Tasha, if there's any questions about negotiation strategies or stories, if anybody wants to share one before I move on to what do you do if they really just won't work with you?
Let's just move forward. We've got 20
Okay.
minutes left. I'm feeling that we may have to have a part two or
Oh,
continue recording beyond our allotted time today so that we get the full deck in. But let's
okay.
keep moving for the moment.
Okay, I'll keep moving and I can talk even faster, so don't worry. Okay, what if they won't budge? There are many companies that are like, we're not negotiating with you. Sorry, school district. And for me, what are those examples? A lot of times when you're doing lease financing, it's a bank. There's just standard terms and conditions on their website. They're like, this is our agreement, the software agreements, for example, large multinational companies. I work with Amazon, Google. They're like, yeah, we're not negotiating with you. So what do you do? What is your role in that case? I put a little math calculation. You do a risk assessment. Do I want to do business with these people? And if so, how badly? If they will not indemnify us, if they will not do mutual indemnification, how badly do we need this item from this particular vendor? And you compare that to how much money is at stake times the likelihood that something's going to go wrong. So likelihood that something's going to go wrong is something we haven't talked about yet. Look, if you're just buying books, the likelihood that they're not going to get delivered is pretty darn low. It's also very low dollar risk versus swim lessons. I think it's pretty likely. I mean, it's not unreasonable that someone who doesn't know how to swim could drown, and that's a huge financial risk. So that's the calculation on how hard should you push back, or should you go forward with this agreement even though they won't give you mutual indemnification. And this is where you all get to exercise your business judgment and document it when you submit something to the board to approve, if it's going on the main agenda. So it could be, this contract is worth X amount of dollars. Even though they won't indemnify us, we can still always go back and cross-claim against them. And we think we really need this anyway, even though they won't provide that mutual indemnification. So that kind of goes to how you explain the scenario, even though you're still going to recommend it. But the flip side, I mean, this is, again, if they won't budge, this is where your business judgment comes in. Do you go forward or do you not go forward? And how do you make that calculation? Okay, drafting indemnification provisions. Okay, now I get to move fast, and this is the real boring part anyway. So here we go. Look, these are the basics. You have to identify who the parties are, decide is it one-sided or mutual, and what is the nature of the obligation. So I will get into this in more detail. Oops, sorry, I just moved ahead. No, I didn't, I went backwards. Okay, also exceptions. So, and I'll give you some real life examples here. So, here's another thing you want to look. Not only is it when they should indemnify you, but when do they not have to indemnify you? So sometimes there's some language in there about you can carve out coverage if it's their own fault or they contributed to the harm. So the milk example, again, not only did the vendor deliver milk in a truck that's temperature was too high, but the district also let it sit out on the counter all day. You might be like, well, if it was contributing fault, then we don't have to indemnify each other. So anatomy and an indemnification clause. And I know this is, getting into the weeds, but this is what you all do in your job each day, and it's what I do. Here's an example. The indemnifying party is obligated to compensate, to pay the indemnified party. Gosh, okay. So the indemnifying party is your vendor, is obligated to pay the district from and against any and all damages. What are those? They're your losses, your liabilities, they're claims you receive, they're causes of action in a lawsuit. Those are called your recoverable damages. So that's something that can be, the three pieces of this are there's recoverable damages, and then it's that are incurred by you, the district, that are either caused by your vendor, arise from your vendor, or are related to your vendor. That's called the nexus phrase. The the specified events giving rise to the indemnification obligation. So like, what are the covered events? And I'm going to break down each of these, but these are the kind of the pieces that you can negotiate or you should be looking for in each one of these. To what extent are damages covered? What's the connection? And what are the covered events? So recoverable damages, again, loss, liabilities, claims, causes of action. I see a lot of times things like intellectual property carved out. Sometimes they will limit what type of damages, but this is pretty standard language. So this is interesting. You will sometimes see that they will have to, if you have to indemnify them for anything related to the contract, that's much broader than it actually having been caused by. So I'm trying to think of an example of, the word related to your contract is much, much broader of when indemnification would kick in than you actually have to prove that they caused the harm. So that's the nexus phrase. Covered events. This is something that, again, is really kind of a legal nuance, but it usually says that they will have to indemnify you if it's caused by either, sometimes it's an either and. There's something called negligence, gross negligence, and willful misconduct. So I'm trying to think of an example of, let's say it's an aftercare program and negligence. It would be negligent if they have a duty to supervise and a kid gets injured in the classroom because the teacher just wasn't really paying attention. That's negligent. That they would, and if there's harm to the kid, you'd want to be indemnified because their employee was negligent. Gross negligent would be if they are drunk or they fell asleep. That is grossly negligent. Willful misconduct would be molestation, or they injured the kid because they hit him. So those are examples of when the parties are willing, to what extent are they willing to indemnify you? A lot of times they won't indemnify you for negligence just because it's too many claims, it's too easy, it's too broad. So usually it just comes down to gross negligence and willful misconduct. But this is language you should look at when you're evaluating an indemnification clause as to how broad and what the impact is, like how protected are you? I also want to give you an example of how you revise a standard one-sided indemnification clause into a mutual indemnification clause. And again, you'll get a copy of this, but you can see, this is what I was trying to verbalize at the beginning. The indemnifying party, you can change to each party is obligated to compensate the other party from any and all loss. It's not there's not a lot of words to change, but the impact of those words is significant. So I want to make sure you have this as an example of, if you want to request mutual indemnification, this is how you could just simply strike out and add some language to make it mutual. I have a real life example to share with you, but I know there was lots of questions about the related claims. So this is a good example of how things can go sideways. So in this case, lots of words here, a school district executed a contract with a food services provider. And the clause said the school district will defend and indemnify the food service provider for all claims or losses arising out of the school district's use of their product. So a student was given undercooked chicken. The student got really sick and was hospitalized, and the district got sued, and the food services provider got sued. They both got sued. But the indemnification clause up above, so even though the food service provider's employee actually caused the injury, didn't cook the food all the way, the district had promised to defend and indemnify them against all claims and losses under the contract. So again, that indemnification clause, there's ways in which you could have made it more protective of the district. And again, I revert back to the sample language I provided on the slide before. Let's see. Related contract provisions. Okay, this is sort of what you all asked about at the beginning. So the duty to defend, is it the same as the duty? So a lot of times these clauses, we've been talking about the word indemnification clauses. A lot of times it says defense and indemnify. It is sort of a nuance, but it's different. The duty to defend means that they will actually step in on your legal defense. If you get sued, they will actually take over the lawsuit. Versus indemnification might mean that the district puts up the legal defense But if there's a judgment against you, they have to pay you back. So the duty to defend is helpful. I mean, the duty to defend, it could be good or bad, but basically they're going to want to pick their own lawyers. Another thing is that's sort of related here is payment of attorney's fees. If you have to, if they have to pay for your legal defense, you want to make sure that they also, or I'm sorry, if they have to indemnify you for the cost of the lawsuit damages, you also want them to pay for your attorney's fees. So you'll see attorney's fees clauses. And I just want to make sure you understand the difference here between duty to defend, duty to indemnify. This is usually something that your insurance carrier, look, if you get a claim against you, you tender it to your insurance company. Your insurance company is the one who's going to really pursue the indemnification. It's usually not you personally. It's not the district personally. It's your insurance carrier. But it's important to have these, to understand what these clauses are and have them in your contracts at the beginning. Hold harmless. Okay, so hold harmless is they're often grouped together, but really what it's saying is it's saying that one party will not hold the other party legally or financially responsible. So indemnification means they'll step in and pay out your judgment. Hold harmless is saying we won't hold you responsible for anything. And so I think that I'm looking for my notes here because I know this was a real specific question. Basically, indemnification is narrower. Hold harmless is for any types of damages, and it's more about waiving your right to sue them or to blame the other party. So it's broader. Hold harmless means we're not going to hold you responsible for anything. Whereas indemnification means if there's damages, we'll step in and we'll pay for your defense, or we will step in and pay your damages if we were to blame. So,
Gretchen, going back to that question that came in, should they include both? It doesn't seem that that would make sense to say in one breath, we're not going to hold harmless at all, and then add an indemnity clause. Is that accurate to say not to
yeah,
include?
we recommend excluding the hold harmless clause from indemnification to avoid giving the term meaning beyond what indemnification is or creating confusion. And again, I think it might depend on the type of the contract and what the risk is and what the dollar value is. I mean, again, let's go back to textbooks. Hold harmless clause might not be a big deal, but if there's any risk of personal injury, then the district might not want to enter into a hold harmless clause with your vendor. They're going to hold you harmless, great, but you don't want to hold them harmless. So, does that adequately answer their question?
I believe so. Thank you.
Okay, sure. And I just want to be mindful of time. Limitation of liability. This is one that actually comes up more often and I think is really important. Read these closely. These tick me off. So I'm going to give the example of the network monitoring contract again. So working with the district, they hire a company that's their sole job. They pay them $25,000 a year to monitor the network, the software use for threats of harm, self-harm, violence against the school. The liability clause says, we'll indemnify you, but we're going to cap your liability at the value of the annual contract, which is $25,000. Like, no, a school shooting is a multi-million-dollar lawsuit. So really look carefully. They sneak this one in all the time, putting a cap on liability. If you want to sue us for anything, we're going to limit our liability, and they'll say to our monthly fee or to the value of this contract. We'll do the math. What's the value of the contract? If it is low and it doesn't at all compare to what the potential damage could be, this is one you might want to go in and revise. So reading my notes here. Yeah, look at the potential monetary risk. This is one that's pretty sneaky. Okay, so I had this activity up here, but I think instead we should use these last 5 minutes just to answer any unresolved questions. You all could, this is basically a bad indemnification clause where I was going to have you guys, but go through and let's see if it's in my notes, if the answers are in here. So you could do it on your own if you wanted to. Yes, but it's the answers are in the notes. So if you want to do that on your own, but I just want to take these last few minutes to answer questions. I know I went fast through the end, but that was sort of my overall plan anyway. So I just wanted to make sure that I answered all your questions. This is very nuanced information.
It is, and so informative, Gretchen. Thank you. I do have a couple of questions, and they tend to go back to the SAM
Yeah.
issue, and I'm really sensing that we're probably going to need to do a deep dive on this, as you suggested with our insurance partners as well. But let's start with, are there any guidelines for when a contract, excuse me, I'm sorry, smaller independent providers such as speech, IEEs, et cetera, have sublimits to their insurance? How can we request the SAM without the sublimits?
That is an insurance question.
Okay,
I mean,
we're going to
that's something where I advise them to work with their insurance carrier. I mean, yes, I think molestation coverage is very, very important in those scenarios, but whether or not you can get the coverage or they can get the coverage is something that, like I said, I was in protracted negotiations with the JPA over, the JPA would not allow after school care with less than $20 million. And so anyway, it becomes negotiation with your insurance provider.
Thanks, I appreciate that. And then we're all the way back to the board meeting discussion. Are there guidelines for when a contract should go in full to the board for approval, in addition to being on a purchase report, in terms of the amount or the type of contract? Are there any specifications you might suggest?
So there's no legal requirement, but some rules of thumb that some school districts provide is the bid threshold. Is this something we went out to bid for because of the dollar value is, I can't even remember what it is this year, $107,000 or something. If it had to be publicly bid or it was above the bid threshold, is it above your contracting authority? Maybe that's your dollar threshold. Is it controversial? That's another one. Is it, something, is it your ethnic studies curriculum or something that you're purchasing that someone's going to want to talk about in open session? Is it personal to a board member where they're going to want to pull it off the consent agenda? So generally purchase orders, but I had a situation where a district put a purchase order for $8 million worth of Chromebooks. And, that's probably something that should, that was too, it became a problem later on with their funding through E-rate. But, again, there's no magic number, but you probably want a district practice in place. And the one I usually see is if it's above bid limit or it's controversial, then it goes on to the regular agenda.
And certainly leaning towards transparency, right? So are there any other questions that are coming in? Here, we've got one more. So to make indemnification fair to both parties, the clauses should say that they are protecting each other. I feel like I took that away from the earlier discussion, and I'm not sure if I'm walking away with the right idea.
Yes. So mutual indemnification. So normally it would say, here's how this would normally read. This is what you receive it from a vendor, and it's going to say the district is obligated to compensate the vendor from any and all losses, liabilities incurred by the vendor that are caused or related to, these events. To make it mutual, you just change it to each party will indemnify the other party. So it's really, but they usually come to you as one-sided in favor of the vendor, saying the district's going to pay them. The district's going to take care of them if if there's any sort of lawsuit that they think is caused by the district. And instead, you want to make sure that each party has an obligation to indemnify each other in the event of a claim.
We have one more question screeching in here at the end. The question is, we have linked district terms and conditions of purchase order on our POs used for both goods and services that are assessed to be low risk. Does the vendor have to sign acknowledgement, or does doing business with the district acknowledgement enough?
So I'd put, if it's linked in there and it says just like software, just like Apple does to us all the time when there's a software upgrade, do you agree to these terms and conditions? Yes, I do. If your purchase order has a link that says you agree to the district's terms and conditions by signing this purchase order, and there's a link to those terms and conditions, I'd hold them accountable to those terms and conditions. That's on them to click on that link and read them.
Gretchen, thank you. Look at us on time, so efficient and just so much knowledge and insight. We so appreciate you and F3 Law for being, decades long partners. Thanks for bringing all your skill and insight to the table. Thanks all for joining us. The recording will be sent out to all of you and posted probably later this afternoon as soon as technology does its work. And again, thanks for joining us. Have a wonderful day.
Thank you.